As always, let's kickstart the show by taking a look at what's really happening across the Asian markets, because it is a green screen whichever market you look at for a change.
To begin with, slippages at 7,800 crore.
But the big one is the 40-day exponential moving average, which is a little lower. Again, not very far away, but that's 19,640.
In China, we're very, very focused on specific sectors.
SIAT's two-wheeler contribution has gone up, and that has resulted in a better margin performance for them. Here's the first take on the index. Straight off the back, it's a 100-point up move on the Nifty.
All auto ancillary segments seem to be doing quite well.
Overall, the company has secured new orders of over 1,300 crores.
Above 19,800 on the Nifty. This is a good-looking screen.
The geopolitical developments can have a wide range of possibilities in terms of how they pan out from here.
To clearly call out, and from a sustainable infrastructure perspective, we are expecting close to 6.3 lakh crore coming across.
No fundamental right or a qualitative right to marry. That's the first declaration here by the Apex Court.
Nifty is up 106 points. We have the mid-caps, which are performing very well.
Okay, it's a good-looking screen, but not as good-looking as it was early in the day. You're with us here on a fresh edition of Closing Bell. We're coming to you live from the CNBC-TV18 News studios. And I'm Prashant. With me, my colleagues Rima and Mangalam. Guys, hi. Good afternoon.
Hi, we've also got Abhishek in the house now as we await the Bajaj Finance numbers. So, hi, Abhishek.
Hello.
Well, Abhishek, of course, is going to analyze those numbers for us as they come in, and should be any time now. Let's just take a quick look at the market before we go any further. So it's a strong day, and it was stronger, as I said earlier. Now, the high is interesting. I mean, if the intraday comes up, I think you'll be able to see exactly that. The high was 19,843. That's also where the last two highs were for the Nifty. There was a swing high, and then the market kind of tried to claw back up and sold off basically about 19,840, 850 is that level, and we've kind of come off from there once again. So 50 points off that level. Nifty Bank has been clearly the weaker of the two indices. It's doing slightly better, tad better than the Nifty, but for it to show some vibrancy, some hope, it needs to climb back above the 20-day. It's not been able to do that. The Nifty, of course, stays above it. 44,714 is the 20-day for the Nifty Bank. Relatively stronger day for the mid-caps and small caps, like yesterday. Although, as we went into close by 3:30, mid and small caps also gave up a lot of their gains, and they ended only marginally higher. Global markets, which, of course, have been in the driving seat for the last couple of days, they're largely steady. Asia was up, and I think European markets are not doing too badly. Last I checked, US futures were flattish, 0.25% lower. So not very much there. So largely steady on the global screen as well. Rima.
Just to quickly run our viewers through the stocks which have fallen from the highs that Prashant spoke about. The high was close to 19,850, close to that. And now we're below 19,800. IT names are under pressure. So TCS, pull up something like an Infosys. You would see the sell-off. TCS is now in the red. Infosys also off from the day's high. In the banking pack, it's ICICI Bank and Axis Bank, which deserve mention. So both these two, HDFC Bank for now at least, is still holding up in the green. Hi.
Hi, the way the market fell from the highs, I wouldn't call it fall, but just cooled off from the highs. It was visible because there was a fair amount of call writing that we saw as well. Prashant did point out to the Nifty Bank being the weaker of the indices. The biggest reason for that is that 44,600 thereabouts, Nifty Bank has a fair amount of technical resistance as well. We have both the 50-day moving average and the 20-day moving average, both of them around that 44,610 and 44,625 mark itself. The option writers, they were hoping for, the market to sustain around that 16,800 mark itself, which is why the put writers were equally active out there, as were the call writers. So those who were, writing that straddle, the 19,800 rather, call and put, were hoping for that 19,750 to 19,850 sort of range on the frontline index. And the Nifty Bank as well saw a fair amount of writing at the 44,500 call. What happens from here is dependent entirely on what FinNifty does, because it's a Tuesday, it's FinNifty weekly options expiry, and the fact that we have Abhishek in our studio as well, because it'll be very crucial to see what the FinNifty does, depending on what Bajaj Finance does as well. So that's something we'll be watching out for. The street, however, still believes that FinNifty would be in this 19,000 to 20,000 range. That's where the maximum options are.
Okay, well, Mangalam, thanks for that. That's the sort of skew from the option side as well. How should you position yourself in the last hour of trade? That's the question. So let's actually put that to Mitesh, who's now joining us. Mitesh, hi. Afternoon. Just a quick sense on the market, which has come off, as I was saying. We're about 50 points off the day's high. Which way directionally from here near term, and what are your trades?
Good afternoon, Prashant. I have been actually advocating to avoid trading the indices, suggesting that we are basically showing signs of weakness on the trend direction, and while that happens, the volatility indicators remain slightly high, which means it will be range, but it will be choppy, and that is how it's been playing out for the last 3 days. If you see 3-4 days, we've kind of failed to sustain about 19,850, and on the downside, we've seen support coming closer to about 19,650. So till 19,850 is captured on an at least hourly closing chart, or preferably a 2-hour closing chart, I think I'll hold my horses and wait for the index to play out. On the stock side, though, I think the crude or the refining stocks, crude or refining stocks are looking good to me. I earlier had a buy on BPCL. I think HPCL is something which is also showing first signs of reversal. So here I would want to see the stock get past 264. So buy about 264, keep a stop at 258, look for a target of around 275. And Balkrishna Industries is a buy. Tire stocks are seeing some traction today. So Balkrishna Industries is a buy with a stop below 25.95 for targets of 2,700.
Okay. Thank you very much for that. Just want to quickly talk about the telecom space. So yesterday we heard Ashmit. Now telecom companies pay a license fee, which is a percentage of your overall revenues. Now that is paid to the government on an annual basis. Now up until now, what the telecom companies did is that they use this license fee as an expense, as a result of which its overall EBITDA came lower, and therefore the tax that the company has to pay to the government was lower. Yesterday, as Ashwin pointed out, the Supreme Court ruled that this license fee is a capital expenditure and not a revenue expenditure, which basically means telecom companies cannot deduct it from their overall revenues or use it as a part of expenditure, and therefore the EBITDA estimates for the past period is going to be higher than what they have computed, and therefore this is likely to result in a tax expenditure, a tax outgo for the for the telecom companies. Now the license period is for 20 years. Now, the way it works is that in the initial period, it's likely that the tax outgo is going to be higher, but because this is considered as a capital expenditure, therefore the overall amortization, depreciation keeps going up, the tax outgo will reduce in the subsequent years. And therefore, over the entire period of 20 years, it's likely to be tax neutral. But at least in the initial period, it's likely to result in higher taxes. Now, Kotak has done some analysis, and they're saying that if this is done for the past period, if this is done on a retrospective basis, if the Supreme Court, if the government comes and says that, guys, you need to pay up now some more tax because up until now you've been deducting your license fee from your revenues, using it as an expenditure. That's not the case anymore. Then, according to Kotak, Bharti faces a potential tax liability of close to about 6,000 crore rupees. This is for a period of FY20 to FY23. The reason is because they complete a 1 year, one period of 20 years from 1999 to 2019, and therefore Kotak has calculated it from 2000. For Reliance Jio, because they've not yet completed a 20-year period, the tax computation is done from FY17 for Kotak, which according to Kotak could be a figure of 8,400 crore. But these are just estimates that, Kotak has put out. It's likely that there will be some prospective also. These calculations are retrospective, but, IFL has also done some analysis on potential prospective taxes that the companies may have to, increase in tax outgo that the companies will have to pay. Right now, the companies have said that they're likely to file a review petition. Therefore, the actual tax liability could get delayed. But, that's the sum and substance of what has transpired. It's just that there's another regulatory overhang on,
so if it's retrospective, what is the total impact for Bharti, for example?
So Kotak has done the analysis from 2020 to 2023 because they've already completed a 20-year license period from 1999 to 2019, right? So they've excluded that. From 2020, Kotak is saying Bharti could stare at increase in tax liability by 6,000 crores. And for Reliance Jio, it's calculated from FY17.
So even if it is retrospective, it's basically from 2020.
Yeah, there is maybe something even for that period of 20 years, but they've not really.
These are not small amounts, even if it is.
It's a large amount. So according to if Bharti's FY 20 to 23 profit was about 220 crore. On that, 20 billion. So on that, we're looking at an overall outgo of close to about 6,000 crore on, 227,000 something thereabout. 220,000, yeah. It's about 27% thereabout. And for Reliance Jio, they're looking at a tax demand of 84 billion on a base of 770 billion
rupees.
of
Rupees
profitability.
crore, 84 billion.
Rupees, yeah.
Tax, telecom, tussle, what do you call it?
Litigation, use all the words that you...
use all the alliteration. Let's go across to Deepan Mehta, who joins us now from Elixir Equities. Tax stability and telecom. Deepan, do you think the twain will ever meet?
Yeah, good afternoon, and thank you for having me on your show, Mangalam. This is the thing, we keep saying that, the ease of doing business is getting better in India. But I don't think so. I think, the way the courts are, the way the regulations are coming through, there's no real ease of doing business. And that's really a risk factor for investors. I mean, we just about got over the nightmares of the Supreme Court judgment about, the fees for the ways which was, compounded, and there were issues over there. And now we have to deal with this tax liability. So I think it's unfortunate. And the fact that the street is not reacting negatively to it, I think that's the only positive outcome of it. But these things, they just drag on, and one doesn't really know the outcome for many years down the line as well.
Absolutely. The market's not reacting. Stocks are not reacting. But yeah, will it be like that, or will at some point, as it often happens, I mean, these things take time because it's a tax matters, the court order, etc., take time to kind of really come to the fore and then grips people's attention. So reactions can be delayed, but that's an important story. For now, we're up, 60 odd points or so, and things are looking quite okay, although off the highs, so as to speak. Deepan, I was looking at stocks which are making moves, and Home First caught my attention, 5% higher. Again, a small company, housing finance company, very fast growth rates. It's an interesting, steady space. Credit losses, etc., usually are low. Any thoughts?
Sorry, Prashant, I missed the name.
Home First.
Home First, yeah. It's an interesting company, and it is into a lot of this low-cost housing, lending against that. And generally, that's an area which is slightly difficult. There are some entry barriers, and to an extent, competitive intensity is less. Therefore, the net interest margins are also on the higher side. And I think that largely, even when there was a downturn, because of COVID and other issues, this company's NPS pretty much stood up. So very positive on the company. Valuations, I think, are of course slightly on the higher side, but then growth rates also have been quite impressive. And costs also pretty much under control. Return ratios are also in line with industry, slightly better as well. So very positive on the company. And, with real estate doing as well as it is at this point of time, there'll be huge demand for credit from that side. And the NPA cycle certainly remains very strong on the housing side. So this company can be a good stock to invest in over the next 2-3 years or so.
All right. Meanwhile, there is some news at the bottom of your screen for Titan, where the TIDCO nominated director has resigned, Mr. S. Krishnan. And along with his resignation, there has been a replacement as well. That is Mr. Arun Roy, who is the IAS Secretary, Industries and Investment Promotion of and Commerce Department of the Tamil Nadu government. Had it just been a resignation and no replacement, then the street would have worried about what happens to TIDCO's stake in Titan, and all those stories would come about. But this is regular course of business, and which is why the stock is unperturbed as well. And for a lot of people who still might, not know about this or still will be surprised, Titan is actually a private-public partnership. The name Titan is derived from TIDCO, which is the Tamil Nadu Investment Development Corporation, and the Tatas, which is TA. So Titan is a public-private partnership.
All right. That's this news coming in, and on Titan. Now, PCBL is under pressure, and it's at the last I checked, I think the stock was down about 4% or so. Sonal is here with a quick review of the numbers as they came through. Sonal.
Thank you so much for that. Well, the numbers didn't look so bad. In fact, there is a margin expansion, and it's a good margin expansion that has come about. On a quarter-on-quarter basis as well, the company has seen margins expand, and that's why that recovery that we are seeing on the stock as well currently. The revenues, they were down 9% on a YOY basis to come in at 1487 crore rupees. However, EBITDA was up 26%. Margins, they came in higher by almost to 480 basis points, leading to a profit growth of 6%. However, we are seeing that profit growth is lower than the EBITDA growth, and this EBITDA growth would have been led by higher commodity prices, basically carbon black prices, which did not percolate to the bottom line as well. Quarter on quarter as well, margins have seen an expansion of 40 basis points. Now, key to note that this could have come in because of the new facility that had been commissioned, the new carbon black plant of the company. Company expects it to be fully utilized in about 3 years, and management is targeting double-digit volume growth over the next few years. But what we need to understand is whether this improvement has come on the back of better demand or just better pricing. So maybe that is something that the street is a little worried about, because most of the chemicals are seeing higher prices, but demand is not increasing. So we'll watch out for that. But yes, reported numbers do not look so bad. The margin improvement is positive for the company.
All right, it will be very interesting to see what the company's overall revenues will be once they fully utilize their plants. Deepan, your thoughts on PCBL? Do you track this one? The erstwhile Philips Carbon Black?
Yeah, I think the reason why the EBITDA margins or EBITDA has gone up and not the net profits could be, I suspect, because of higher interest and depreciation on commissioning of a new plant. And generally, we want to avoid cyclical businesses like carbon black. I think our preference is more for the carbon black consumers, and one such company which comes to mind is Balakrishna Industries, who themselves have gone into carbon black as a backward integration. And certainly the chips have been down for this company because the export-led demand has slowed down. But as and when that turns, this company again should start reporting fabulous numbers. They have a lot of capacity in place, capacity utilization is under control. So whenever demand picks up, they can start to, grow the top line, bottom line as well. So from a tires and carbon black perspective, that Balakrishna Industries remains our top pick. Usual disclosure, we and our clients are invested. And carbon black players, I think generally we have seen a lot of volatility in their earnings, which doesn't really suit long-term investing.
What have you made of Dalmia Bharat's numbers and the loss of market share in the East? According to Nomura, the volumes in the East could have been lower by nearly 20%. Do you think this loss in market share is a bit structural? Would you avoid Dalmia? Or do you think you should buy into this decline that we're seeing?
I think there's going to be a lot of changes happening in the market shares of a lot of cement companies, the way they are expanding capacities across the board, and especially the larger players, they are just expanding at breakneck speed. And at some point of time, 2-3 years down the line, that's certainly going to result in a glut. That's my assessment. But for the time being, I think you will see good quarterly numbers from cement companies per se. Maybe Dalmia Bharat disappointed, but other companies, I think, will report very good earnings. They have the benefit of operating leverage. Input costs have gone down, and cement prices, especially, and cement volumes especially, have remained pretty much strong. So this quarter, next quarter may be very good for cement, seasonally as well. But from a medium to long-term perspective, our view remains negative on the sector.
Okay, Deepan, what we'll do is we'll take a quick commercial break here. We'll come back, and one of the things I want to talk about is the potential UK-India FTA agreement. Lots of excitement around it in specific names. I mean, in the textile space, alcohol is a bit more complicated. Mangalam we were talking about that yesterday. We had a discussion in the morning, so we'll come back, play out some of those bites, and ask you for your opinion. Take that break. Our first here on closing. We're coming back. We'll also have Ajay Vora from Novama joining in with his perspective on markets. Stay tuned. Okay, status quo, holding pattern, not very much different. No excitement. Maybe post 3 o'clock we'll see some action, at least at the index level. But let's talk about that India-UK FTA. Long awaited. It's not gone through yet. There are still some contentious issues. We had a discussion on two specific aspects in the morning. One is on textiles, right? But not all textile exports out of India will benefit, because for the bulk of textile exports to UK, the duty is already zero. But for things like apparel, there is a duty, 10% plus duty, which perhaps goes to zero if the FTA gets signed. And the other aspect, of course, is alcohol. And there, we are net importers. I mean, 95% is imports in terms of alcoholic beverages. And the industry here wants certain concessions which perhaps will level the playing field. We spoke with Jain Dasgupta, former ambassador of India to the World Trade Organization. He spoke about the textiles bit. And Vinod Giri, Director General, Confederation of Indian Alcoholic Beverage Companies, spoke to us about the second aspect. Listen.
$5 billion worth, which are apparel, leather items, etc. They have certain duties. For yarn and fabrics, it is just 4%. But for finished products in textiles like clothing items, it ranges between 10 and 12%. So with the conclusion of this FTA, hopefully we will get zero duty access for all textile products spanning from yarn to finished clothing items.
The British laws prohibit, or they define whiskey as a spirit which is matured minimum for 3 years' time. Now, we have two problems with that. First of all, it of course pushes up the cost significantly, because in India, we have something called angel share, which is the evaporation loss when the whiskey is being matured. Now, that is, in India, is about 10 to 15% every year because of the climatic conditions. Whereas in Scotland, it would be 1 to 2%. So now we have a situation that 30-35% of the whiskey, if you force that condition, will evaporate. In addition to that, the inventory carrying cost in India, the cost of capital in India is 8 to 10% easily for any company. So we are looking at another cost pile-up happening. So now we have a situation that most of our mainstream products are unable to go to the UK markets because of that condition. It will not be accepted as whiskey. So that severely limits our ability to export.
Okay, well, that's basically opinion coming through. Deepan is still with us. Deepan, you heard both the gentlemen. So on textiles, it's pretty clear. If it comes through, the apparel makers it'll open up a very large market and level the playing field in that sense. That duty goes away. On the alcohol side, it perhaps is slightly longer because, the terms of trade are completely skewed. In terms of UK, we are major importers. Any thoughts in terms of stock market implications?
No, Prashant, I don't think the stock market has anything much to take away from this development. And when it comes to alcohol, I think the best returns have come from domestic companies with domestic homegrown brands. Companies like Tilak Nagar, Som Distilleries, Radico Khaitan. These have been great value creators because they've been able to manage the regulatory environment far better than the likes of United Spirits. And I still feel that these are the companies which will really drive the growth when it comes to alcohol consumption as well through homegrown brands. And they're not going to be impacted much by this free trade agreement. So I don't think we should read too much into it, per se.
Textiles is you don't think it opens up a large market? I mean, I think, I was reading somewhere, China and Bangladesh apparel exports to the UK are about $15 billion every year.
That's right, but that's right. But only one company which is worth buying, that's Gokuldas Exports, and that also has run up recently in the last 6 to 12 months or so, especially after the acquisition they did of the Middle East company that really brought this company into spotlight. Valuations are rich, but maybe well deserved. And certainly, I think they will explore that opportunity as and when that comes through. So Gokuldas Exports is really a company worth watching. We keep it on our market watch screen, and if there's a correction, 10, 15, 20%, this is one of the companies one can look at entering into.
Deepan, thank you so much for joining in and giving us your perspective on a whole host of stocks. Just before we move on, a couple of stocks that deserve mention. Kohinoor Foods has been hitting the upper circuit for the last couple of trading sessions, and now we had a flash at the bottom of your screen which told you that maybe there could be a cut in the minimum export price for basmati rice from almost about $1,200 to $850 per ton. So if that were to happen, a lot of these rice exporters would benefit. The other one I'm looking at is FACT and Chennai Petro. In fact, FACT hit a 20% upper circuit in yesterday's trading session as well, and now it's followed it up with another 13% up move. There's something definitely happening in the fertilizer space.
But even NFL and RCF are higher in trade, not to the same extent, but you can see that same upward trajectory.
These usually move in a pack, right? Yeah. All the fertilizer stocks. So you just look at NFL, there you have it. RCF also. RCF was the other stock which was up around 8 to 9% yesterday too.
This is the second day, guys.
Second day,
Deepak Fertilizer, NFL, GNFC, all these were higher yesterday and they're high today as well. So I don't know if there's something happening specifically with fertilizers, but that's the move.
Or and intuitively, it could just be that monsoons were less, so maybe people had to use more fertilizers. Who knows?
Who knows? Lots of moving parts there. The other bit is all these, very less float companies, government companies, ITDC, STC India, and a few others as well I saw in the morning. I think they're all still up.
ITI is
MMTC, ITI, they're all up very, very sharply, but very small floats, out there. Ajay Vora is joining us now. He's head of equities at Nuvama Asset Management. Ajay, good to have you with us here. Thank you very much for your time. Do you own, I want to start with what I was discussing with Deepan earlier, anything in the textile space in the portfolio, Ajay? And would you like to own anything there?
So hi Prashant, and firstly thanks for having me on the show. So the clear answer is unfortunately no. If we would be owning it, I'll be really happy.
Well, you can always decide to now. Well, you think it's...
But so far we are not owning it.
You're not owning it. What's the new thing for you in that sense? I mean, any new theme, not new, but any themes you've kind of got into or looking at closely or interested in?
So on the other hand, fortunately, one of the names which you just spoke about is something what we own, and that is more on the refining side and not on the textile sector. We believe that, the whole refining cycle is looking pretty positive over next 6 to 12 months. And here, it's better to play standalone refiners rather than the OMCs who, also has the marketing division. Because, on the refining side, we are seeing a lot of capacities getting shut. And, the players are getting decent premium because of their slate. So, players like, Chennai Petro or a couple of other names, they are looking pretty interesting. And fortunately, we were a bit early in this trade. So happy with that move today.
About tire. Tire numbers have been positively surprising. Everyone knew raw material basket prices coming down, but the extent of the gross margin improvement has positively surprised the street. We saw that in the prior quarters and again this time, CEAT. Is this a space that you like, or do you think the best of the margin expansion is now behind the companies?
So, Rima, within tires also, we were owning a couple of names, and fortunately that also has done well for us. You are right that, to some extent the margins are peaking out. But, earlier, if you look at the estimates for most of the tire companies, so, if you remember a year back, they all were in the margin band of, I would say, anywhere between 7% to 10% EBITDA margin. So if you look at, CEAT, it was at around 7-8% margin. And yesterday they reported 15%. What most of the analysts were building in on a long-term basis was somewhere close to 10-11%. And when I say long-term, I say 2-3 years. But considering, now they have reported 15%, and even if there is some sort of, raw material pressure because of the crude moving higher and the rubber prices moving higher, I still feel that even if it settles closer to, say, 11, 12, 13%, the overall trajectory in terms of the balance sheet improvement, in terms of the growth, looks pretty interesting. And if you then compare that with the valuation, they are still not at the peak valuations. So although, next couple of quarters, you can see some sort of margin pressure, but not to the extent of, what it would have been earlier. So I think that, they are still a decent bet from current levels also.
All right, tire is a decent bet. You often have the knack of, identifying things which turn out to be big movers. I remember at the start of the year, you said that you were positive on the way the rail infra is moving. At the same time, the defense space, big moves we've seen across, all the railway stocks and the defense stocks as well. What are your thoughts on those, and where do you see the next move?
So the railway space is still looking very interesting. I think it has more legs from here on as well. And, this has always been a stock picking kind of a market. And therefore, we should be really stock specific when we are, identifying stocks within a theme. But I think that, considering how government have picked up on the spending side, so just to put some numbers into perspective, 5 years back, government used to spend closer to 50-60,000 crores on the sector. And today they are spending closer to, 240,000 crore. And as a result, we are seeing more, better platforms, better trains and electrification and all those things are happening. I think this is a really long-term trend. Although certain stocks may be really expensive over there, but I think if you are better at picking newer ideas who can benefit, because the size is pretty small for a couple of players in terms of where they are operating right now. So the growth rates can be quite exponential. So I think railways as a theme is still looking very interesting.
Sorry, just to, you said standalone refiners. What's the story? Is it, I remember there was a shortage of end products, diesel at one point about 6 or 8 months back. I think that got largely resolved. Is it strengthen refining margins, which is expected to sustain? I mean, because when these stocks start to perform, I mean, they can give you... we've seen episodic 50-60% runs very quickly. Are we in for one of those phases, in your opinion?
I hope so, Prashant, and that is what our call is. The underlying thesis over here is that, most of us, we look at the GRMs, and the way the Singapore GRM gets calculated is a bit different with a very different slate. The 40% petrol and all those things are there in that particular slate. But if you look at our standalone refiners, they are heavy on the diesel side, where the cracks are somewhere close to, $32, $33. And if you look at, the way the whole average of the slate turns out to be, their GRMs can be much higher. And we feel that, going into next year, if the way the refining capacities are getting shut in China, you can have a clear up move in the underlying GRMs. So our sense is that, all these companies, if you look at, a stock like Chennai Petro, for example, eventually the potential EBITDA can be, I would say, similar to what the market cap is right now. So I'm saying that is the kind of, upside which one can have with the cycle. And one need not fool ourselves, because honestly, these are all cyclical businesses. So you have to be very agile when you are investing into them. But I think if the cycle sustains and maybe it gets better from here on, the upside, as you rightly said, can be pretty sharp.
You're absolutely right. I was just looking at last year what MRPL did. It opened 2022 at $40. The year high was 130, from 40 to 130, and it finally closed the year at 56. So if you bought on the 1st of January, you saw 130, but you basically made $10. So yeah, I mean, hopefully
it's still
more,
25%, right?
You're like 2022, people would scoff. But hopefully this is more structural, right? Ajay, you're saying?
I think, I wouldn't say structural like 3, 4, 5 years, but I at least feel that, over 12 to 18 months, the cycle gets better from.
Okay.
Ajay, any calls of yours which haven't worked? And what, according to you, played out which is different compared to the thesis that you were expecting?
So honestly, we are in the business of some right and some wrong.
Of course.
So I think that, within banking, if you see, and maybe in hindsight, what we have realized is that, the whole space is so overowned that in spite of, a couple of names reporting really good numbers, maybe the stocks haven't done that great. So, if you look at the whole market structure, the two largest sector have their own challenges. So on one hand, IT, which is completely global linked, till the time US doesn't, bottom out in terms of growth, and which is what, the general expectation is, we don't see a major growth revival over there. And on the other hand, the banking was something where, we did make good money over there. But after a point, in spite of companies reporting good numbers, we are not seeing that kind of re-rating. So I strongly feel that is mainly also because in the near term, obviously, over longer term, stocks will follow earnings. But at least in the medium term, I think because of the over ownership of the sector, stocks haven't done well within this space.
Do you have thoughts on the fertilizer space? I mean, we were just discussing a big move coming by on a lot of these names.
No, we don't track it closely.
All right. Hang in there. We have some story coming in. Learn from sources that the government might be considering minimum export price cut for basmati rice. This is basically what we were talking about earlier as well, and something that explained the sort of move that we saw in names like Kohinoor Foods, etc. for the last two trading sessions. Abhimanyu joins in with some more details on that one. Abhimanyu.
There were meetings which were earlier also held by the government with the rice exporters, and there were several recommendations made by rice exporters from Punjab, Haryana and Uttar Pradesh before an interministerial committee. The industry, the rice exporters, they had told the government and they had urged the government to reduce the MEP for basmati rice to boost export competitiveness. They had claimed that Indian exporters could not win orders in global food fairs in Istanbul and Iraq due to a higher MEP of $1,200 per quintal. And they have also claimed that they have lost orders to competitors from Pakistan and Thailand in the recently held food fairs. And what sources have indicated so far that the government is considering a review in the minimum export price for basmati rice. Now, the industry is demanding that the MEP should be reduced from $1,200 per ton to $850 per ton. And the government, meanwhile, has maintained that it wants to ensure affordable rice for Indian consumers while also maintaining good prices for farmers. So the government is saying that it wants to ensure affordability of rice in the Indian market, and while also ensuring that the interests of the exporters are also not harmed. So till the time the next meeting of the IMC, the Interministerial Committee, takes place, the current MEP is going to continue, but clearly it remains to be seen how things are going to pan out in the next few days, how early the IMC would be held, and what kind of a decision would be taken would of course be determining the fate of the exporters who have made these set of recommendations to the government.
Abhimanyu, thank you very much for joining in. Important story. Ajay, we'll take your leave over here. Thank you very much for joining in. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment East Street Chatter. We also get you a few BTST calls from our experts. Stay tuned.
Welcome back. The 3 p.m. move for the Nifty Financial Services is on the way up. So we're seeing a wee bit of an up move, and that's reflected in the way the Nifty Bank has moved as well, and as has the Nifty. The Nifty is now a little above that 19,800 mark, as against a little below that mark when we started the show itself. But is it likely to move further higher? Well, the answer to that depends on a couple of heavyweights. We're looking at Reliance. Reliance has actually spiked to the higher end of today's trading range. In fact, it's recovered a good 0.6 to 0.7% from the lows, and there you have it, a wee bit of a spike on that one as well. But this is our favorite segment on the show, T Street Chatter, where we will get an insight into the dealing room with Nimesh as always, and also a few tidbits about the stocks that are up and about in trade. Nimesh.
Hi Mangalam, so we are pretty close to that very crucial resistance of 19,830 on the Nifty. If that gets taken out, the overall feedback is that maybe you'll see a new high in this series itself. So that's the overall feedback from a technical perspective. In terms of flows, unlike yesterday, today the activity is on the higher side. The flows are mixed, but the institutional participation is there, and largely it's biased towards the financials. And within financials is the NBFCs and the housing finance companies, which are well bid by the large institutions. So that's the overall feedback. I guess the theme of PSU outperformance continues. So a lot of PSU stocks continue to outperform. HPCL, BPCL are buzzing in trade today. So is Coal India. So is IRC, TSE as well. So that theme of PSU outperformance continues, and that's backed by volumes as well. But I guess in the near term, the trend to would be dominated by earnings. And within earnings, I guess the financial earnings will be very crucial for this week. We have some heavyweights reporting numbers. Bajaj Finance today evening, and end of the week there is ICICI Bank as well. So for the Nifty to head towards the new highs, I guess the financial has to support, and within that the earnings would be very crucial to watch out for. So that's the overall feedback. But 19,830 is a level to watch on the Nifty for a meaningful breakout on the upside.
Nimesh, in terms of specific stocks, what's on your list?
Well, in terms of individual names, Prashant, the first stock is Macrotech Developers. The stock has been buzzing off late on good volumes as well. I understand a couple of domestic funds, insurance companies, as well as mutual funds were active buyers in the last fortnight. The stock is very close to that threshold of getting included into the MSCI in the November review. So that's the stock to watch, at least from an MSCI inclusion point of view, and hence that we've seen a bit of outperformance there. So that's the first one. The second stock is NMDC, buzzing off late, strong volumes as well, and I understand a couple of HNI investors are quite active in NMDC off late, and hence a bit of outperformance there. In fact, it's not only NMDC, but all the mineral companies are seeing a bit of a domestic traction, whether it's NMDC, GMDC, or for that matter, oil as well. So that whole pack seems to be back in interest of larger HNI investors. So that's the second one. The third stock is Swan Energy. This is one stock we don't talk too much about. Been buzzing off late, but I understand there's going to be a large block. Nearly 10% equity can change hands in Swan Energy very soon. So that's something to track going forward in that particular stock. And the last one is IRFC. There were multiple blocks in today's trade. Nearly 3% equity got change hands. I understand a domestic mutual fund was a buyer in today's block. And on back of that block deal, you've seen a bit of 5% up move in that stock as well today.
Okay, thank you very much for that. Swan Energy, not often that the stock pops up on our radar. Abhishek has been waiting by in the studio, patiently waiting for Bajaj Finance's numbers. Is it uncharacteristically late, or does it often come even post-market hours?
It may come post-market hours. There's
Looks
no
like we're 15 minutes left now.
It depends on how the board takes the numbers and what kind of approval they give. So business update has been pretty strong. So don't deny the fact that their AUM growth, despite competition and despite the word on street that competition will lead to a lower growth, they have been absolutely fantastic. So 32% plus kind of a YOY growth is perhaps one of the best in 15 quarters that you are seeing. Even the customer base that's grown robustly for them in Q2. It's an unlike Q2 where seasonally, customer base does tend to taper off, but this time it has been pretty robust. New loans disbursed, that's the negative part. It's declined 14% plus on a sequential basis, which is the highest ever decline that you are seeing. So as I mentioned, unlike the previous trend of customer addition not happening, this time it has happened around. So that's pretty good for them, but they've lost out on the new loans. So let's see, how the cost structure pans out, because for NBFCs, as I highlighted in my preview as well, this will be the quarter wherein the cost of funds will actually peak out, and from Q3 onwards you will see normalization of cost of funds and the yields will come back. So you can expect net interest margin to decline.
All right, Abhishek, thanks very much. You sit right there. There's 15 minutes to go, but we're just expecting any time now, maybe a little later, but we'll be ready. Mitesh is here with what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Prashant, I'll go with two BTST calls. One is HDFC Life. That moved up early in the day and then was consolidating, but should see follow through. So BTST here with the stop at 636 for a target of 650. And the other one is Container Corporation Concor, now trading near the day's high. That's a BTST with a stop below 716 for a target of 732.
Mitesh, would you have a view on Canfin Homes? I mean, that's been a decent mover today. That also is at the highs of today's trading session so far.
Canfin Homes, Mangalam, if you look at the recent price history, the stock was trading very ranged and sideways. And while there is some base building around the 730, 720 mark, the breakout will happen once we see the stock get past 780. So I think I'll wait for the breakout because I think it's still showing some flatness, though I think on the hourly chart, there's some pickup on the activity, suggesting that 780 could be tested. But a closing above that should add strength, and then we will look for a long trade.
It'll be interesting because they're also reporting their results today. Abhishek just tells us helpfully, so we'll watch out for that. But talking about results today, L&T Tech Services, we'll have to watch out for that as well.
And the stock is at the day's low now, so down close to about 2%. So Q1 was subdued for L&T Technology. The company said it was impacted due to a delay in decision making. But in the conference call, they also indicated that things are improving on the sidelines. And therefore, the street is expecting a pickup in revenue growth. In fact, even the management indicated that Q2 will be better than Q1. That's what's being baked into the current street estimate. So we're working with a dollar revenue growth of about 2.8%. So we need to see whether that plays out, because the company also has given a full year revenue forecast where they are expecting a 10% organic growth. So after a weak Q1, in organic terms, it was just flattish. The company needs to deliver in Q2. The second point will be the margins, and margins for the company are likely to come under pressure on the back of wage hikes, and that will result in a 1% decline in the company's profitability. The key to track will be whether they continue to hold on to their FY24 guidance, which stands at 20%, including an acquisition that they did last year, 10% on an organic basis, and whether that margin improvement thesis plays out. The company has guided for 17% margins by the end of this year. But, given the way IT companies have positively surprised on the margin front, they're actively looking at cutting costs as revenue slows down. It's quite possible, the margin guidance could be met. We'll get into a break. On the other side, Jay Bala of Cash the Chaos is with us. Stay tuned.
Okay, welcome back. Jay Bala is now joining us. The market saw a bit more, maybe a little bit of loss of momentum as well, because you open up and then for the rest of the day, not very much. We've seen that the last few days. What's your sense?
That and the fact that it's come near the resistance levels mentioned at 19,888 and the markets are stalling there is not a surprise. But the market break below a confirmation point that comes at about 19,635 to 19,600. The markets were to go below that level. It is a confirmation of the sharp decline that I'm anticipating, and we'll wait for the markets to reverse below that level, and we'll wait and not preempt the market.
Just getting to your stock calls, do you want to take us through some interesting trades that you've spotted? I see Polycab is one, and that's going to be on our radar because it reports numbers tomorrow.
Interesting. The fact that Polycab has gone up tenfolds from its 2010-20 level, and it's exhibiting some ending patterns on the charts. But it's a conditional call. We want Polycab to break below 50.85. Once that is done, it will be an indication that a very large move is ending, either the move that started from 2023 or even the move that started from 2020 itself, that's ending for the stock. If in either case, we're going to see a sharp decline to somewhere about even 4,200 to 3,600, that's the minimum case. But the condition for that is that the stock should break below 50.85. Before that, you shouldn't preempt the market. The second trade is on Dr. Reddy. I'm bullish on the pharma sector, and I've been saying that for quite a few weeks now. But once again, this is a conditional trade. We want to see Dr. Reddy trade above 56.30. Then we can place a stop below 53.63 and look for the stock to scale fresh 52-week highs somewhere close to 6,200.
You also have a view on Reliance. I mean, it's done okay-ish in the last few minutes. It's moved on the way up, closer towards that 2360 odd mark, currently going into the market's close with a fair amount of demand behind it. Your thoughts out there?
Yeah, last week I had anticipated a bounce back to come through for Reliance, and it has come through, but it's weaker than anticipated. It's very crucial stock for the overall market and the direction of the market. If 2468 comes first before 2295, then the stock is okay. But if 2295 had to break before 2468 gets printed, that's a very dangerous, bearish structure for the stock. So watch these two levels like a hawk.
And on the global side, any other developments you'd like to highlight, or we have your views, I mean, from the last time, but anything you'd want to highlight?
Yeah, as I've been anticipating, copper broke to a fresh 52-week low below the 2023 May level. And this is indicative that a further 20% drop is coming. And I've put this out since February of this year. So nothing new here. But this, Bitcoin is an interesting, because it's a very important measure of risk appetite. And looks like it had a fake move yesterday. If Bitcoin breaks below 26,500, that will be a confirmation that yesterday's spike to about 30,000 plus was a fake out. And it's likely to decline to somewhere close to 14,000, a very sharp decline. And again, that's indicative of loss of risk appetite in the market.
Jay, Nifty Auto looks like it's been in an uptrend for the last 18 months. What's the near term telling you?
Yeah, Nifty Auto and capital goods, they are in a very similar structure. In the short term, both have exhibited exhaustion in its momentum. But the trend is still up. As far as Nifty Auto is concerned, as long as the sector stays above 15,700, the trend is still up, but it's looking toppish. But so keep your stops and keep trailing stops as long as 15,700 holds. But if 15,700 were to give through, you might want to start taking profits. And within the sector, two-wheeler looks slightly better than 3- and 4-wheelers. If the negatives were to come through, I think it will come from Tata Motors and Maruti.
Right, Jay, before we let you go, I see an Andy Warhol book in your bookshelf behind. Are you an art fan or are you a pop fan?
All the books that, I'm not a great reader. My wife is a great reader. This is actually a copy of my real bookshelf. So the real bookshelf is actually somewhere else.
Keen eye, Mangala. All right, well, Jay, we'll leave it there. Thank you very much and appreciate you joining in with that perspective as always. Thanks indeed. You know, just two names I want to highlight, and these are sharp moves which came in the last 30 minutes of trade. One is Supreme Industries. Intradays, if you can pull this up. Supreme Industries went back to the previous high. And from there, it's kind of cooled off, all in the last 30 minutes. I think went to 4,600, 50-60 rupee move in the last 30 minutes, and then a bit of a sort of pullback. And the other one is JSW Infra, recent listing, similar kind of move in the last 30 minutes, but again kind of stalled right towards the end. But all in all, I mean, nothing to complain. Traded with 100 points on the Nifty for the bulk of the day, and we end with about an 80-85 point gain. Which is, just under 0.5%. Nifty Bank also ending with just under 0.5% gain. And of course, mid and small caps have been the stronger parts of the market. But yeah, actually the mid cap index ends with just 1/3% gain. Maybe the small caps were stronger. Yeah, they were stronger. But we end pretty much where we opened on the small cap index, which is about 13,060 or so. So that's just under 1% higher in trade. Rima.
Reliance was a big mover, and particularly in the last 30 minutes, Reliance Industries closing with a gain of about 0.7%. On the banking end, you had HDFC Bank, which reported its numbers up 0.8%, and you had Kotak Mahindra Bank rallying 1.5%. Plus, life insurance companies SBI Life and HDFC Life ending with gains of nearly 2%. Couple of these oil and gas names. So, BPCL was up close to about 2%. And in the mid-cap end of trade, Mangalam will talk more about Chennai Petro and MRPL. Power Grid looked up. On the losing side, Tata Motors slipped 1.5%. TCS lost ground. L&T, UPL, IndusInd Bank closing with cuts of nearly 1%.
Well, it was a day where, the market did respect the boundaries, and we were pretty range-bound on all the important indices, including Nifty Financial Services, of which there was the weekly options expiry, but a lot of mid-cap and small-cap stocks moving. Fact was the one that moved 12% after a 20% move in yesterday's trading session. Emit Company were another set of fertilizer stocks. We had RCF, NFL, all of them doing well. Rima did speak about Chennai Petro and MRPL. We did see a decent move come by on a lot of these names. Also watched out for a lot of the other PSU-owned names, names like ITI, which were up 10%. We did see a decent move come by on names like Ircon as well, up around 8.5%. Gujarat Pipavav was the other one, which was up with a gain of 8%. Among the losers, we had Zaggle Prepaid, which reported its numbers last week, and then also had a deal with Visa that saw some profit-taking. Some bit of a profit-taking move coming by or extending on AGI Greenpack as well, which was lower in yesterday's trading session. Continues to see some sell-off today as well. And Emphasis ended the day with losses of almost 3% and ended at the low point as well.
Well, that I think sums up how we kind of leave off trade today, second day, and it's been a good one, a good Tuesday with that 85 points on the index. There's a wrap on this edition of Closing Bell. It's a goodbye from all of us here. But don't go anywhere. Our Thursday special, Commodity Champions, will come up with Manisha just next.